And this is the Analyst desk, a place where experience meets curiosity. Most investors are busy chasing the same 10 trending stocks. But what if I told you there are small Indian companies quietly solving real problems, the kind that could turn into the next multi-baggers? And today, I'm revealing one small cap hidden gem that are flying under the radar yet tackling massive challenges. And here's the deal, if you watch this video till the end, I'll show you exactly how even a small investor can build a smart position in one of these companies. And the one crucial sign that tells you when it's time to buy or stay away. Let's get started. Let's start with our company VA Tech Wabag Ltd, listed on the NSE and BSE. Now, most investors know the big infrastructure or energy names, but very few talk about water. And that's exactly where Wabag stands out. This is an India headquartered global water technology company that has built its expertise around one of the most critical needs of our time, clean water and wastewater management. What's interesting is their business model. Wabag runs an asset light, project based EPC model, which simply means they design, engineer, and build large scale water and wastewater treatment plants for both municipalities and industries. But they don't just stop after building the plant. They also take up long term operation and maintenance contracts. This gives them a steady, recurring stream of income. Wabak also works on DBO, boot, and HAM projects where they build, own, and sometimes operate these projects before transferring them back. It's a clever mix of one time project revenue and long term annuity. In terms of their expertise, they cover everything from desalination, that's turning seawater into drinkable water, to industrial effluent treatment, zero liquid discharge, ZLD systems, sludge treatment, and high purity water solutions for industries like power and pharma. Geographically, this is not just an Indian story. Wabag has a presence in more than 25 countries across India, the Middle East, Southeast Asia, Africa, and Europe. They employ nearly 2,000 water professionals globally. That's a massive in house technical base. And here's a fun fact, according to Global Water Intelligence 2024, Wabag ranks as the third largest desalination plant supplier in the world. That's no small feat for a company from India. So, when you think of infrastructure plays, most people think roads, power, or railways. But water, that's the silent giant. And Wabag is positioning itself right at the heart of that opportunity. Before we talk about how big this opportunity really is, let's look at the industry itself, because the numbers here are eye opening. First, let's talk about India. According to IMAR Group, the Indian wastewater treatment market is already around $9.6 billion in 2024, and it's expected to almost double to around 18.6 billion by 2033. That's a solid 7 to 8% annual growth rate. Now, other research houses like Mark Antel Advisors, P&S Intelligence, and Research and Markets estimates range anywhere between 1 to 12 billion dollars, with growth rates in the 7 to 16% range. So, to keep it simple and realistic, you can say India's water and wastewater market is a multi-billion dollar industry, growing at high single to low double digit rates every year. And this makes sense because urbanization, industrial expansion, and stricter water regulations are all pushing both government and private players to invest heavily in water infrastructure. Now, zoom out to the global picture. The worldwide water and wastewater treatment market is massive, estimated at roughly 320 to 370 billion dollars today, and projected to touch 550 to 650 billion by 2034, growing around 5.5 to 6.5% annually, according to Precedence Research and other global studies. Now let's talk about what the latest annual report and filings say, because this gives us a real sense of where the company is headed. According to Wabak's FY25 annual report, the management continues to highlight three clear themes: staying asset light, remaining net cash positive, and expanding globally while focusing more on O&M and annuity based revenues. The auditors have given an unqualified opinion, which is a good sign. It basically means the financial statements are clean with no major red flags. FY25 has also been a year of milestones for the company. They've commissioned and executed several large projects, including the 400 million liters per day seawater desalination plant at Perur in Chennai, one of India's landmark projects in this space. On top of that, Wabag secured a mix of design, build, operate, and hybrid annuity model orders, continued to win awards for its water reuse and recycling projects, and celebrated a very special moment, its 100-year legacy. That's right, Wabag traces its roots back to 1924-25, which means 2025 marks its centenary year. 100 years of working in the water business. That's rare for any engineering company. Let's quickly look at some key numbers from Wabag's latest filings just to get a sense of scale and financial strength. Starting with the order book and revenue performance, the FY25 annual report highlights a solid order pipeline across desalination, municipal, and industrial water projects. The company has been consistently adding new contracts both in India and overseas, which gives strong visibility for the next couple of years. According to Analyst and brokerage notes, including a recent Geojit report, Wabag is sitting on a net cash position of around 705 crore. That's quite impressive for an EPC company, which usually runs with high leverage. Finally, talking about market value, as of recent snapshots, the company's market cap is around 8,800 crore, placing it in the mid to large cap range. On the innovation side, the company talks about its initiative called Blue Seed, an internal platform aimed at fostering new ideas, improving efficiency, and encouraging in-house innovation across its teams worldwide. Alright, let's quickly break down Wabag's financial story over the last 5 years because the numbers really show how the company has evolved. Starting with revenues in FY21, Wabag reported around 2,835 crore, and that number moved up modestly over the next couple of years. And then about 3,294 crore in FY25. So, despite the ups and downs, the trend shows stability returning to top line growth. Now let's talk profits. For FY25, the company reported a consolidated profit after tax of around 295 crore, according to aggregator data. That's a healthy jump compared to earlier years, and it's one of the strongest profit performances in the last 5 years. If you look at the broader picture, 5-year revenue growth has been moderate around 5% CAGR, according to Screener, but the real story is in the profitability improvement. The company's PAT margins have improved to around 8.09% in FY25, showing that their focus on high margin O&M and international projects is paying off. In terms of returns, ROE has been in the 11 to 15% range, with the FY25 number close to 15% and ROC around 20%, which indicates strong capital efficiency. And importantly, Wabag remains debt light. The total debt to equity ratio is around 0.15 to 0.2. And as we discussed earlier, the company actually sits on a net cash position. That's rare for an EPC player and gives them room to grow without financial strain. So, to sum up this part, revenue stability, improving profitability, clean balance sheet, and solid return ratios. That's the financial foundation behind Wabag's current momentum. Now, let's balance this with the bullish side, why some analysts and investors actually call Wabag a potential multi-bagger. First, there's the structural tailwind. Water scarcity, urbanization, and stricter regulations are all driving long-term demand for wastewater treatment and reuse. It's a sector with a very long runway for growth. Second, Wabag has deep expertise in desalination and zero liquid discharge (ZLD). These are high margin, technology intensive areas where very few Indian players can compete at the same scale. That gives them a strong moat. Third, the asset light model and net cash position lower corporate risk and give them the financial flexibility to take on large or even strategic projects without over leveraging. And finally, their increasing share of O&M and annuity revenue means more predictable earnings, and in the market, predictability often leads to higher valuation multiples. So the bull case says strong industry tailwinds, global expertise, and financial discipline could make Wabag a long-term compounder. The bear case says execution delays, working capital stretch, and premium valuation are reasons to stay cautious. The truth? Like most good investments, it's about execution, patience, and timing. Wabag has the ingredients of a potential winner, but it still needs consistent performance to turn that potential into shareholder value. Hope this video adds some value to your feed. If so, please like this video, comment what's your rationale about this company, also share with your friends for better reach. Thank you.